very good morning to you. Welcome to Business Morning. I am Bisi Adebayo. President Muhammadu Buhari is seeking the approval of the National Assembly for an external loan of $5.513 billion. Now, this loan is to finance the revised 2020 budget, priority projects of the federal government on COVID-19, and support for state governments. The facilities being arranged comprise the International Monetary Fund's $3.4 billion, the World Bank's $1.5 billion, $500 million from the African Development Bank, and $113 million from the Islamic Development Bank. Meanwhile, the Monetary Policy Committee of the Central Bank of Nigeria yesterday trimmed the benchmark lending rate by 100 basis points from 13.5% to 12.5%. And according to the CBN Governor, Godwin Emefiele, this was a unanimous decision taken by 10 members of the committee in attendance at the meeting. The Emefiele-led committee also believes that a sharp decline in output growth is expected in the second and third quarters of the year, but a reverse to positive growth by the fourth quarter is certain. But the CBN's optimism would actually depend on proper implementation of the current stimulus initiatives to prevent Nigeria from sliding into another recession. Well, let's get a sense of what analysts are saying about this very decision of the central bank and the federal government's loan request to fund the budget from the head of portfolio management at Commercial Partners Asset Management, Victor Louis, who joins us from Lekki here in Lagos via Skype. Good morning, Victor. Well, let's begin our conversation with the external loan request by the president to fund the budget. There seems to be some kind of misunderstanding over the letter to the Senate that the president is asking for a fresh loan. Is it really a fresh loan?
No, it's not. It's not fresh. So clearly, the budget for 2020, obviously because of the whole COVID-19 pandemic, had essentially been revised downwards. So upon the revision, that revised budget proposition has essentially been forwarded to the National Assembly for approval. So that's what we're having. So it's not a fresh loan. The budget deficits of about 5.3 trillion would essentially be funded by both local and foreign borrowings, and essentially the foreign borrowings will be from multilateral lenders, like you mentioned earlier, from the IMF, the World Bank, the AFDB, the Islamic Development Bank, and also from the Brazil Exim Bank as well. So it's not a fresh borrowing. It's basically on the back of the adjusted, 2020 budget proposition.
Victor, this week has been full of surprises coming from the GDP numbers to the capital importation data, and now the CBN's reversal of the MPR or reducing the MPR by 100 basis points. I bet you didn't see that coming, did you?
Well, I mean, it was a widely, surprising move on the back of on the part of the Apex Bank and the committee, really. But I think that what the committee has done basically is to signal its intent to support, growth, to support, the sort of fragile growth that we're looking to see, and even, tame output growth. So I think what the, committee has done is to signal its intent, to support growth by cutting those rates. I think the question really is around, the potency of that benchmark rate, and, clearly the transmission mechanism is not as efficient, as you would have in other clients. So the question really is around how potent that drop would be on overall lending, in the economy, really.
But what sort of synergy have you seen between the monetary policy and the fiscal policy?
I think that's a critical part of the equation. It's extremely important that there is great synergy between the monetary and the fiscal authorities. The monetary authorities have done, quite a lot, and it's important that, the fiscal side of things, complements, whatever efforts that the monetary aspect is putting in to ensure that, the economy is able to ward off whatever potential recession we're likely to face, or whatever, potential slow growth, we're likely to face down the road. So obviously, the, adjustment of the budget numbers is certainly part of, what the fiscal side is doing to realign, its policy with monetary policy to ensure that the economy is essentially on the right path.
To what extent will the MPC decision complement the economic recovery and growth plan?
Well, again, I think the question really is around, how potent really that, benchmark rate is. we've had times when, that rate was in single digits, and that didn't really, impact, lending rates, and that did not really spur or engender any significant, credit growth to spur, growth for the broader economy. So that really is the question. There are other, tools that the Apex Bank has been able to use to try and, get banks to lend and to basically reflate the economy, if you will. But the potency of the benchmark rate has been in question for quite some time now. So moving on that, was where, a lot of people were surprised about. So it really remains to be seen how that will pan out. But, going from evidence that we have, so far, that has not proved to support, outputs or economic growth.
How do you see the monetary policy responses impacting portfolio investment?
Well, in terms of, portfolio investments and across markets, really, I think what is basically happening, in my view, is the benchmark rate is essentially sort of playing catch up now, because we've seen, treasury yields decline quite significantly. We've also seen the same for bond yields as well. So at the long end, you're seeing bond yields around, 12.5 thereabouts. So dropping the rates to that level is basically, having that rate sort of, play catch up. And that's a rate that should essentially anchor, how things move within those markets. But of course, there are several idiosyncrasies, within the market that, sort of like ensure that, these yields move in the way that they do. So it's really, for me, tough to see what the impact would be. I don't think it will be anything significant. What you're likely to see is maybe some, slow reaction, really, but I don't see that it would significantly impact, our portfolio arrangements and what is going on with the fixed income and even equities markets as well.
Head of Portfolio Management at Commercial Partners Assets Management, Victor Louis, thanks for joining us on the program.